Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So yeah, happy Friday, everybody. Welcome to the start of the weekend. Hope you guys have all had a great week. But yeah, I'm Dan from Trading with Dan. This is our Bitcoin morning update. So we shall go straight over to those Bitcoin 4-hour charts. So yeah, Bitcoin is not doing a lot. It is still sideways, ranging actually in this very tight range we've got going on here. Just extend this along. Oh, wrong one. In this very tight range we've got within, obviously, what is probably our wider range that we are currently operating in. But yeah, this the high is obviously of around, we'll call it 64,000. The lows of a nice around 60,000. So yeah, we're just in this $4,000 range, awaiting a break, obviously below 60,000, a close below 60,000, a close above 64,000 like we got here, but obviously without the swing failure. But yeah, I suspect if we do close above 64,000 again, based on what happened last time, this time we will accelerate through. If you test the level repeatedly, you're just more likely to get continuation. But yeah, that is what we're waiting for. Obviously, we've got it's non-farm Friday, so we've got non-farm payrolls today, so that could have a bit of a move on the market. Things are starting to get pretty interesting in the bond markets, which are basically the biggest markets in the world for actual value. But the bond markets are like many multiples bigger than all the equity indices. Bond markets are they are pretty significant thing. I can't remember who said it was. I think it was one of the presidents of the United States said that if he could come back as anything, it would be the bond market, because it can just intimidate anyone, I think, or have power over everyone, or it was something along those lines. But the bond market is important. But we are starting to see increases in volatility in the bond market. We had the FOMC the day before yesterday, which didn't really do too much, but then out of it, we don't normally talk about UK politics much, but out of nowhere, you can call it, I kind of call it out of nowhere, we had Andrew Bailey, the guy from England. We don't normally talk, not UK politics, UK. We don't talk about UK anything, UK economics really. But the markets, and he had been telegraphing pretty much a 15 basis point rate rise over here in good old UK. Pretty much telegraphing it for a few weeks, market pricing it in with, I think, over a 60% chance of certainty, and then he just doesn't do anything. So I think that is one of our first signs. Well, it's not our first, it's the second. I'll tell you what probably the first was. First recently, but yeah, that's probably our second sign of basically what central bankers of the impotence of central bankers. That's what I will call it, the impotence of central bankers. They can't really do anything, and he literally bottle jobbed it last minute bottle jobbed it, and that obviously sent bonds, bond yields obviously going down, bond prices rallying. So a bond rallying because obviously they're not raising rates. It actually, funnily enough, what the Bank of England did actually hit the front end of the US yield curve, the US bonds, more than the actual FOMC did, which is crazy. The first thing that I was alluding to as well was basically Canada's legislature sort of giving up on its yield curve control, on its YCC, and obviously kind of Canadian bonds. Then they basically, the yield rallied, so they went the opposite of what happened in the UK. But so we are starting to see, well, I wouldn't call it dissent, but we're starting to see they're not so coordinated, put it that way. The central bankers, the collusion that goes on, as Nomi Prince says, the collusion of central banks is under pressure here. It is under pressure. Yeah, UK bottle jobbing it, Canada kind of giving up on its yield curve control. Yeah, I mean, like the people are starting to look behind the curtain for these central banks and realize that just in a world of such absolute massive indebtedness and leverage, which is basically a product of debt as well. You're basically borrowing whatever to do whatever. That is debt. Yeah, rates can't go up, guys. And if the bond market starts to throw a tantrum, it is game over. The release valve will be the currencies, because the release valve won't be doing what Tor Paul Volcker did. They won't be jacking up rates to about 20%, put it that way. Yeah, so we do live in very interesting times, and what I will say, obviously, the release valve is the currency. The currency is going to go down against whatever it does against other currencies is one thing. So the DXY may go to the moon. Obviously, if the dollar, like for example, the DXY is looking pretty good now, but that's obviously because obviously the pound, which is a component against it, is tanking on the basis of obviously no rate hike that was priced in. So yeah, I mean, like I said, these are relative trades. So what I am saying is against real things, precious metals, our beloved cryptocurrencies, even stocks. I mean, stocks to a certain extent are real things because they're shares in a real company with real cash flow. For the ones that have real cash flow, obviously also stocks, yeah, and then commodities in general, soft hard, yeah, basically agriculture, normal commodities, normal metals, industrial metals, and everything, and obviously the energy complex as well. And they will obviously rally. That is inflation. This will be hyperinflation at some point in some places. So yeah, we have got exciting times ahead. We have got exciting times ahead because we are so far beyond the point of no return for central banks ever been able to taper this Ponzi, as good old Max Kaiser would say. So very interesting time. Like I said though, 10-year rallying, but as we can also see, not really having an effect on Bitcoin because, like I said, this is relative to other things. Obviously, particularly the dollar at this moment. It's not the dollar, the pound at this moment. Yeah, if you want, if you want to look at it, yeah. I mean, obviously, this dollar up move is not clearly not a risk off move, is it? Look at it. Look at this, and then let me just show you. Cathy Wood's wet dream. Let me just get that old Nas coin over. It's hilarious. We did know this was going to happen though. We did talk about this into the end of the year. We were going to get a reflation. At first the macroeconomic data, I was talking about it being a mini reflation. And you just got to laugh at these markets. You just got to laugh. It was about a mini reflation, but now we're literally showing signs of potential Goldilocks, which is reflation is basically increasing economic growth whilst inflation is increasing. Goldilocks scenario is increasing economic growth whilst actually inflation is decreasing. We are showing signs of potential increase inflation decreasing. Well, it's obviously the trend. It's the ROC, it's the second derivative, it's the rate of change. The rate of change is slowing, which is then obviously that's what drives the markets. The rate of change drives markets more so because markets are future looking. But yeah, so if we end up in a Goldilocks scenario, just wait to see what stocks and Bitcoin and everything's gonna do. So yeah, I mean, we did speak about it in yesterday's video, but yeah, just look at it go. Excellent. Let's just have a shout out to Peter Schiff and gold really going nowhere. But again, like, this is a move up in the face of the dollar going up as well, which indicates that this dollar move is not risk off. It is not risk off, and it isn't anything to be feared. That is my main point. It's not anything that's going to start trashing markets, because it's moving up on just other reasons, basically. Other than like I keep saying, other than risk off, it's not risk off. 10-year as well. 10-year. Well, the 10-year, obviously this is a 10-year, not the 2-year, so this is like the midpoint of the curve rather than the front or the long end of the curve, the 30-year. But yeah, as you can see, starting to break down, starting to look like it wants to break down, starting to look like a very toppy formation. We've had this horizontal support drawn in for a while, and I mean, like I said, the release valve is going to pretty much be the currency, not actually rates. So I think this can come down. The Fed will implement YCC, yield curve control, as soon as you start uttering such things. Then the dollar is based. That is just the beginning of the actual end of the end of the end, the beginning of the very end. If they get Lyle Brainerd in, then yeah, just watch for wild things. But yeah, we live in a who is it? We live in a world. Who is it saying we live in a world of, George Gammon, that's it. We live in a world of central banks gone mad. We literally live in a world of central banks gone mad. Financial repression. There is nothing. They are so far out of control. All they can literally do is stand by whilst they inflate asset prices. The ultra rich get ultra richer. Poorer people get squeezed by inflation. They then decide, well, we're going to have to try and tax people because that's the Keynesians answer for inflation. Well, we can just tax the extra money and then bring inflation down. It's madness. It is all madness, guys. We live in mad times. That's all I'm saying. But on the flip side, we are all here involved in cryptocurrency, potentially the future of the financial system. If nonetheless an asset that will hold value better than the dirty fiat trash coins. And then yeah, right, rant over. That is it. Let's have a look at Ethereum, Bitcoin, also showing promising signs, but obviously we have got a major level up here, and there's low vol. This is low vol in Bitcoin, so we are expecting a move, and regardless of direction, upside or downside, low vol leading to high vol. High vol usually leads to Bitcoin outperforming, or basically moving more than the altcoins will. Well, moving more if it's to the upside, but not moving more. Altcoins will move more if it's to the downside. But nonetheless, what I'm saying is this potentially will have the chance to move down, come and back test some levels if Bitcoin does indeed accelerate. If it continues a nice orderly grind to the upside, then and then yeah, I mean Ethereum could realistically actually do very well, but like I said, low vol leads to high vol, so we have to potentially lean onto the side of expecting high vol, so that at which point altcoins are going to suffer relative to Bitcoin. Obviously if it's high vol to the upside, altcoins are going to go up in dollar value, but yeah, we only care about Bitcoin value. What is dollar value? Dollar value is literally an oxymoron, isn't it? We pretty much know the dollar is ultimately going to zero and no value. So yeah, saying even the term dollar value, there's a clue there that there is a clue. But yeah, Bitcoin dominance as well, still trending down. I mean, we are going to come into areas of basically support. We are literally in a zone of I guess we could join a horizontal around here if we wanted to, but I'm not going to, because it looked like I've just drawn it because we're here. But yeah, we are moving into this area where we can bounce, get supported, so maybe that will coincide with a nice move in Bitcoin. Well, nice if it's to the upside, not so nice if it's to the downside, although to the downside I still would suspect it would be a BTFD in opportunity in Bitcoin, like it always is. It always is a BTFD opportunity in Bitcoin. I mean, because we are sat here basically near all-time high, so whenever you bought, whatever dip you bought ever in the whole history of Bitcoin, you were correct, and the trend is your friend. So what else do we want to look at? Not much else. Let's look at stochastics. Still kind of got my ticklick off, but nowhere near as bad now. 4 hour turning up, holding a nice trend line here. Look, good read here. So obviously we got upward pressure potentially coming in from there. 10 hour, I'm sure is still just flip-flopping about, but we'll wait for the 10 and 12 hour to load. Oh no, actually coming down nicely now. I say coming down nicely, but this is good. This is looking like a potential bullish reset, and we potentially have a trend line that we could get supported at in the 10 hour as well. 12 hour coming down, it's a bit of down pressure. Daily though, this is the one I think that is going to bust us up through that $64,000 level. $64,000 question, $64,000 level. But yeah, looking good there, good read there. Daily, 2-day bullishly resetting with our optimistic bias. Same with the 3-day, but 5-day just turning back over. Weekly though looking grand. Bi-weekly looking good, and monthly looking good. So I mean, like I said, I mean, we can look at the chart, we can look at the trend, we can look at the fundamentals, we can look at, I mean, everything we look at. So barring a black swan, and we do live in an environment much more prone to in inverted commas black swans than previously. Then barring a black swan, we are just in a crack up boom. We are in a Ludwig von Mises crack up boom. Anyone just wants to know what's happening in the markets, just search crack up boom, and that will literally tell you what is going on. So yeah, that is it, guys. Remember, this is not financial advice. I am not a financial advisor. Always a DYOR, and I shall speak to you guys soon.